This is what I had posted on one of my groups. And if you really look at it, high potential probability reversal zone for Nifty. And this basically was the trade which was pointed out with the high probability zone with stop loss very close. And if you really look at it, this was stocked at 17,335 with a stop loss of 17,345. We are on 5 minutes, and for that the target is all the way to 17,190, which is near about 145 points. 145 points of reward for a risk of 10 points, which is 14 times reward to risk. And it's not because of me, it's thanks to Elliot. That is the strength of Elliott Waves. Welcome everyone. This is a long awaited video. I started talking about markets kya lagta hai, and there have been few people who asked me what you're talking about. I don't understand. And what I talk about there is something which was done by a great scientist, in my opinion, a great analyst called Elliot, and the technique is called Elliott Waves. And I'm trying to give you in a very short, simple way the definition or how do you identify the Elliott waves. It's an ocean, waves, ocean. It's an ocean. I mean, learning Elliott waves takes decades to learn and to be able to see a lot of markets. But what I'm going to be giving you is a small mini dose, which is going to take you a very quick start and start seeing the clarity of the waves. A very simple market cycle as defined by Elliot is that you have got something called as an impulse and you have got something called as a corrective wave. That makes a complete market cycle. So markets move rapidly with a push. It's all motive wave or an impulse, and then they realize, oh, we probably have come little too far, and then they correct or they slow down. So the theory says that the motive wave or impulse is always made up of 5 wave sequence. Okay, so if you look at it here, one, look at the circles, one, and then there is a correction which is a 2. Now you can call 1 and 2 together as one complete market cycle also, because it is made up of one impulse and one corrective wave. So there is 1 and 2, and there is 3 and 4, again an impulse followed by a corrective wave 4, and then 4 will become a 5. This is where the impulse gets over, and after 5 there is a 3 series correction, which is an A, B and C. So very basic simple thing, an impulse is a 5 series sequence, which is 1 2 3 4 5. A correction is a 3 series sequence, we put it as A B C. Within these, the wave 1 is also an impulse, so it will also be done with 1 2 3 4 and 5. Wave 2 is a correction, so there is alternative impulse and correction. You look at this, 2 is a correction, which is A B and C. Now 3 is again an impulse, which is 1 2 3 4 5. After that, C is also 4 is also a correction, which is A B C. After that, you have got a 5, which is an impulse, which is 1 2 3 4 and 5. Little confusing in the initial times, but if you want, you watch it multiple times. Then after this impulse, there is no correction. There is a big correction going on, but within that correction, the first wave is impulse, which is 1 2 3 4 5, an A wave. After that, the B wave is a corrective wave against the A wave, which is ABC, which goes up, but a corrective wave because it's against this impulse. And then there is another impulse, which is a C, which is 1 2 3 4 5. And same thing you would also see here, is what you will see in wave 2. You will also see it in wave 4, and the impulse you will also see it in the bigger picture. So the concept is it's a fractal market, and the more detail you go, you still are able to see discover those 5 waves impulses and 3 wave corrections. And basically it's a structure in which market is going, rather than having a drunken man theory. Elliot says that there is a structure within which the markets move, and there is also a lot of Fibonacci in there. So this is 1 plus 2, 1, 5, 21, 89. These are all number of waves which are there. And then 1, 3, 13, and 55, again number of waves in the corrective wave, which adds up to 2, 8, 34, and 144. These are all Fibonacci series numbers if you really look at it. So there are a lot of Fibonacci which is hidden in the Elliott waves also. For the limitation on time, I am not getting into a lot more details of the Fibonacci, but instead, I want to talk about something which is going to help you identify when the wave 1 is going on, when the wave 3 is going on, what are the characteristics of these waves. So let's look at that. But before that, how do you really benefit from it? It allows you to be in market in the whole move. You know that now there is a wave, fifth is pending, so I don't want to exit myself. Okay, allows you to pick up perfect tops, perfect bottoms. And you would have seen that repeatedly on my videos. I say now market is going to reverse, and it reverses. It's not magic, and I'm not gifted person. I am only trying to deploy what Elliot talked about, what Fibonacci taught us. So it's only what I see the markets doing based on the multiple tools that I have. Then it can do a drill down analysis, a triple screen, perfectly being done in Elliott Waves. It can both be used by the trend followers. So just identify wave 3 and then be a trend follower. Contrarian, identify wave 5 and be a contrarian, hit it against it. I trade both. Helps you to trade with 1 is to 10, even better risk to reward. Just on this Friday, I uh, in one of our groups, I mentioned a trade, 10 points, 10 nifty points stop loss, and about 120 points profit. That is 1 is to 12. You can do this repeatedly. Then I will try to show you that trade as well towards the end. It helps you choose the right option strategies when you want to go sideways market, what you want to do. If it is a directional market, wave 3s, wave 5s, how do you want to place your trades? Let's go back and talk about the Elliott Waves emotions. This is a very important thing, and if you understand this, you will be able to start identifying waves very quick. Initially maybe you are going to be able to do that with 50%, 60% accuracy. That is also very good. And then as you look at more and more markets, you will be able to do 70%, 80%, 90%. And then you would say deja vu, deja vu, deja vu, deja vu. Oh my god, how come? And that's what happens to me a lot of times. So let's start with the wave 1. So wave 1 usually starts after a downfall, and here this uptrend, you also have the same thing with the downtrend. So the first wave 1 is where markets are still bearish. There is no momentum clue. There is low volatility. There is no change in the trend which is visible. So there is just a little bit of movement, but you see a 5 wave series of many times. After that, there are sellers. Of course, for every buyer there is a seller, and sellers get little more aggressive, and they think that wave 1, which was the first wave, that was just another correction in the last down move, and they want to start pushing the market down. Usually wave 2 corrects almost whole of wave 1. That's a characteristic of wave 2. After that, there's a major emotional thirst. Usually greatest, strongest move that you see is wave 3, and if you can enter it quickly, you have got a lot to earn. Okay, And there are also wave 3 is usually made up of five sequence, 1 2 3 4 5, and you can have third of third, you can have third of third of third. So within three, you're going to have five series, right? So within that, the third one, within that third, a third one. If you really look at it, it's like a vertical jump, and you can make a lot of money if you are sitting on that. Okay, let me go back to the emotions. Then the wave 4 comes. Wave 4 is full of indecision, whipsaws, choppiness. It's very, very time consuming. It's very painful wave where people start saying, boss, we have had such a big rally in wave 3. Was that a right rally? Do we did we do the right job? But then it does not fall just like wave 2. It goes, mostly it goes sideways. After that, there is a final push, and this final push is usually driven by the greed or the last struggle momentum. It will have divergences, it will have blowouts, failures, a lot of things, except some of the commodity markets fail to show you divergence on wave 5. A lot of times you would see wave 5 to be strong enough in also the currency pairs. So be little careful. This is more accurate for the stock markets. Then there is a first wave A correction. The A correction, people are still bullish. They still are waiting to buy the gap, by the drop in the price, and they think the market will go just like wave 5. There could be one more upswing. Okay, and then in wave B, there is a bull trap. A lot of people get trapped. They think that the wave A was just a correction, and they would have put in a lot of money, and then they lose a lot of money. So B is also a little bit painful wave, which could be sideways, which could be aggressively up, but then it ends up in wave C, also called as a killer wave. A lot of times it is extended wave, and it's very, very painful. You would see the characteristic in wave C. Wave C is usually very, very aggressive wave, but then when it is over, it is over. I mean, when wave C has to take away the last seller in the market, and once the sellers are gone, then again the market will start rallying up. Either it is, if it is 1 and 2, then the third wave will start. If it is 3 and 4, then the fifth wave will start. So usually it will start on the upswing after the wave C. That is how the market emotions are. If I have to give one single word for wave 1 and wave 2, I would call it ambivalence. A lot of confusion. We are not very sure about that. Wave 3 is about confidence. Wave 4 is about indecision. Wave 5 is the greed wave. Wave A is uncertain wave, and then wave C is the fear wave. Wave B is also uncertain wave. So wave A and wave B, just like wave 1 and 2, these are uncertain waves, and then wave C is a fear wave. Okay, which will take everyone down. So if you can just remember these emotions in the market and just follow the newspaper, follow CNBC, follow whatever you are following, and if you are able to us correlate the talks, if they are talking about indecision, then you're probably in wave 4. If these guys are more talking about the greed, the market is now going to go to the roof, and this and that, then you are probably in wave 5. If there is a lot of confidence, you are in wave 3. Very, very easy to understand by what the other market participants are talking about. Now let's quickly talk about some charts, some interesting charts. But before I talk about the charts, I wanted to show you the trade that I talked about. 1 is to 12 risk reward. So this is a trade. Okay, and here if you look at it, I actually have posted this to one of the groups when the market were very, very close to the high, and the stop loss that I had put in was 17,345, could have been the entry, and my target is all the way here, 1700 and 190. And I'm fairly sure that this target is going to be hitting. You are also seeing it in SGX Nifty. I mean, you never know what's going to be coming. But if you really look at it, this is from 345 to about 180, 190. Let's take 200. So it's about 135 points for a risk of near about 10 points. That is beauty of Fibonacci. That is how Fibonacci will help you. And how did this help me? I knew that there is a corrective, there is an impulse which is 1, 2, 3, 4, and then 5. And this impulse, after this impulse, there is a corrective wave, which is an A, B, and a C. And we are talking about 5 minutes chart. This C wave is exactly 127% of the A wave. We talked about the killer wave. That is what this C wave is. And now there are multiple other things which are sitting here at this level, which are making, for example, for the upper 1, 2, 3, 4, 5, which is a wave 3, you have got 61% of the correction sitting right there, Fibonacci. And now, since it is sitting right there, I can be very, very confident. I can take a trade. Anyway, my stop loss is only 10 points. Even if I'm wrong 10 times, I'm okay. But Elliot will help me be right 8 times out of 10. Now, that is the power of Elliot. So now from here, I am just going to put the target 127% of wave 4, which is going to be near about this level. So now this is one way. I mean, that's the that's the trade. But to show you, I will just show you how do we count 1, 2, 3, 4, 5, and let's just look at some time frame. Okay, so this is a beautiful wave 3, and I talked about wave 3 is full of aggression, confidence. Okay, and then this wave 3, the one which you see in blue color, it is made up of 3 wave sequence again. I said, right, it will be 5 wave sequence, which is an impulse. 1, a 2, a 3, a 4. 4, see the confusion in the 4. There's so much of confusion, indecisiveness in the 4. And then the 5 is full of greed. If you look at this again, within this, the third wave, if you really look at it, I mean, it's almost vertical. Compare it with the other up moves. This is almost vertical move, right? And that is the kind of third that you could actually see. That's one very basic simple way of looking at 1, 2, 3, 4, 5. Then after that, there needs to be a correction. Now that correction, if you really look at it, very nice. People think that it is only a correction within this wave 5, and people start buying, and then suddenly a wave C comes. Wave C is a killer wave. So that is how you will see ABC. Now here, let me just take you to one more example, and then take a pause. Yeah, here. So if you look at it from here, now we are going reverse. From here, there is an ABC correction. There is an A, there is a B, and then there is a C. And I'm talking about the C wave, which is the impulse again, which needs to be done with 5 series: 1, 2, 3, 4, and a 5. Okay, and within this also I am able to count 1, 2, 3, 4, 5. There is an A, B, C. You are able to see it, right? 1, 2, 3, 4, 5. So even if you start going deeper and deeper, you will be able to keep finding the details, more and more details. And that's exactly what is the fractal nature of the markets. I hope I have done justice to help you understand how to do Elliott Waves counting. It was a very, very short class session. I usually take more than 24, 40 hours to help you understand the complete Elliott Waves. Try to squeeze it in. Uh, Please subscribe if you like this channel, if you want to see the markets kya lagta hai, and if you want to learn more Please subscribe. I'm going to be posting more and more interesting things here, and like it if you like it. Cheers. Have a great time. Enjoy your trading, and see you some other time. Cheers. Bye.